Question 2, part A, ask us, oi, if the disclosure requirements of the claim of 150,000 in the additional information point 2 in the notes to the annual financial statements for, I hate these names. What say they? Obuchle. For the year ended 31 December 2018, your answer must comply with the provisions of IS 37. Again, this is very theory based. The solution is in the solution, so I'm not going to discuss it. That's literally just from IS 37, from your notes, something you need to know. You can go look at that by yourself. Discuss with reasons. If the provision for future operating losses referred to in additional information 3 in the accounting records of Obuchle Limited for the year ended 31 December 2018 complies with the definition and the recognition criteria of a provision, again requirements of IS 37, what we'll do is list the requirements of the definition and then say whether it complies in each respect, then the recognition criteria and list whether it complies in each one of those respects. In terms of future operating losses, however, we know before even starting that future operating losses will never be a provision because it won't comply with the definition. Because it's in future, there's no past event basically. There's no obligation to incur those future operating expenses. We'll have a quick look at that solution when we get there. Prepare the necessary journal entries to correctly account for the dividend transaction in additional information 4 for the year ended 31 December 2018. Easy peasy. Prepare the necessary journal entry to correctly account for the sales transaction of the sports supplements to Sport Limited in additional information 8. So that's your revenue entry. And because they asked for they asked for the journal entry, we'll do the journal entry. Then they want us to disclose information in points 1, 5, 6, and 7. So quite a lot of disclosure. For the 31st of December 2018, according to the requirements of only IS 37, IS 10, and IS 8. Right, so we'll get to that disclosure. Calculate the deferred tax balance. Statement of financial position, 31 December 2018. Guys, same principle as what we did before. As you read what you're required to do, have a page ready and draft what you can actually draft in terms of that solution. And then G, Obuchle's current overdraft facility arrangement with Luxembourg Bank will expire on that date. For the year ended faithful representation. Okay, this is again just the theory question. I'm not going to go through that. You can read through that by yourself. All right, let's start. Disclosure they wanted was 1, 5, 6, and 7. 3 reasons, 4 journal, 8 journal. Okay. So point number 1, they want disclosure. On the 1st of Jan 2017, Obuchle Limited. Okay, let's start with that. Obuchle Limited is a diversified South African listed company involved in the manufacturing and retail of medical products. These medical products are sold locally and overseas. Profit before tax for the year ended 31 December 2018 amounted to 1.95 million, before taking into account any of the below transactions. On the 1st of Jan 2017, Obuchle brought a blender machine which was immediately available for use as intended by management, and it was also brought into use on that date. During the current financial year's audit, it was discovered that an incorrect cost price of 1 million was used to calculate the depreciation of this blender machine since the acquisition thereof on the 1st of Jan 2017. Right, on the 1st of our year end is 31 December 2018. So just in terms of timeline, what we've got over here. Ooh, not what I wanted. 31 December 2018. 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 31 What's it doing? Okay. Right, so in terms of timeline, what we have is 31 December 18. First day of that year was 1st of Jan 18. First day of my previous financial year, 1st of Jan 17. That is the date I purchased this blender machine. No, man. How do I fix this? Too high. Right, so basically what's happening here is our year end is 31 December 2018. 1st of Jan 18 is the beginning of the year, and we bought this blender on the 1st of Jan 2017. However, during the current year's audit, we saw that we incorrectly depreciated this asset as if the cost price was $1 million. So, the estimated depreciation period is 10 years. So what we would have done is we would have depreciated 100,000 for this year and 100,000 for the current year. Agreed? It furthermore tell me that the cost price of the blender was correctly recorded as 3 million. Right, so the cost price was done correctly. That was 3 million. So my journal entry on that date would have been correctly to debit PPE with 3 million and to credit bank, let's say they paid for it in cash, with 3 million. So we're happy with that. However, the depreciation was incorrect. We depreciated 100,000, where over the 10-year period should have been 300. Agreed. Everybody happy with that? Okay, so that's where my mistake comes in. In the accounting records of Obuchle, on the acquisition thereof, the effect of this information is considered to be material. The SARS allows a tax allowance on the blender machine of 40% in the first year and 20% per annum every other year, and that is not apportioned. They also say that SARS will not reopen the previous year's tax assessment. So what needs to happen is on this date or somewhere in my new financial year, I issued financial statements relating to previous financial year. Those financial statements would have contained that mistake of 100,000. So I need to show a note to my users of the financial statements. If I give them a new set for 2017, where has the changes come in? In terms of 2018, I don't have to show that in my note. I can just correct that by journal entry. And then the correcting journal entry, do you agree that I under depreciated this asset? I need to increase depreciation. How do I increase depreciation? Debit. Depreciation, credit, accumulated depreciation. What do they want? They want a note. So first thing to disclose in my note is an explanation of what has happened here. And I don't know what's happened here. What's going on? Okay. All right, so first thing, they asked me to disclose this. So, Obuchle Limited, note to the financial statements for the year ended 31 December 2018 that you would have drafted already when you got this question. First point, prior period errors. What happened? During the current year, it was discovered that the cost price used to depreciate the machine was incorrect. A value of $1 million was used instead of the cost price of $3 million. The error has been corrected in the prior period, and the effect on the financial statements are as follows. And then you only show the 2017 year. There's an increase in depreciation expense of 200,000. I've put that in brackets because it decreases my profit. Everybody happy with that? And that then has a deferred tax effect of 28%. Why deferred tax? Because they said they will not reopen previous year's tax assessment. Then there would be a decrease in my property, plant, and equipment. My journal entry was to debit depreciation, credit accumulated depreciation. Accumulated depreciation reduces the cost of my assets. And again, 28% tax effect. these two need to always agree to each other, because that's how it works. Okay, everybody happy with this note over here? Right, so that deals with point number 1. The only other thing that we need to touch on when it comes to point number 1 is the deferred tax effect that would be in effect. The deferred tax effect. Basically, they told me that they will not reopen previous year's tax assessment. So if I'm telling you that my machine had a cost of 300,000, that should have been correctly told to SARS if that's what I accounted for. However, the depreciation last year was only 100,000, so my carrying amount, no man, I'm mad. So in terms of my tax base, for SARS purposes, 3 million would have been for 2017. They would have given me a 40% allowance for that year, which then amounts to, how much is that? 1.2. 1.2. So my tax base is the 3 million minus 1.2. Putting that into my deferred tax calculation, found over here, I've got my blender machine with the tax base. That can't be right. Yes, that is right. So this calculation would entail 3 million minus 1.2 for the first year, that's 40%, minus 20% for the second year, which would be 600,000. Everybody happy with that? So end of 2018, I would have a tax base left of 1.2. Everybody comfortable with that? In terms of my carrying amount, for year 1, I would have had 3 million. I would have depreciated only 100,000. But now I've corrected that and added an extra 200,000. Everybody happy? So this is initial, this is corrected. Then for 2018, I would have corrected it and depreciated by 300,000. So my carrying amount at year end should be 2.4. Is everybody happy with that? Right, and 2.4 is then my carrying amount. Questions? None. Wonderful. That's what I want to hear. Right. Then I have point number 2. Obuhle Limited started to export their weight control tablets to the United Kingdom just before, what did they want from 2? They just wanted the discussion. Can you guys read through that by yourselves? Okay. I'm not going to deal with 2 then. We'll skip to 3. Obuhle was an exhibitor at the annual London International Medical Exhibit held in May 2018. The directors decided to exhibit their new range of medical products at the next exhibition to be held in May 2019. The rent of a bigger stand at the medical exhibition in May 2019 is significantly higher than May 2018. The directors are of the opinion that Obuhle will incur an operating loss in respect of 2019 for the 2019 exhibition, as the operating costs including the higher rent will be much higher than the anticipated sales. A provision of 250,000 for the operating loss in respect to the exhibition was made in the financial statements for Obuhle Limited. For this one, they asked me just to discuss, should I make a provision? This was question B, am I right? Can you see it there? Where's that? There. Yes. Okay, so the discussion. Firstly, what is a provision? A provision is a liability of uncertain timing or amount. So first, let's define a liability. It's a present obligation arising from a past event, the settlement of which is expected to result in the outflow of resources embodying economic benefits. Right, and then we say that in the case of Ubukhle Limited, right, firstly defining a present obligation. Do we have a present obligation to incur future operating losses? No, we don't have to go to that exhibition. Okay, so that's your argument for present obligation. Okay, is there a past event? No, the past event will be the exhibition, which is in the future, so no past event. Then the settlement of which is expected to result in the outflow. That's true. If I do pay this, there will be an outflow of resources. Okay, so I've got a no, no, and a yes. That means I do not comply with the definition of a liability. So firstly, I cannot recognize a provision. Secondly, they did ask me to look at the recognition criteria. The recognition criteria is that a provision shall only be recognized if there is a present obligation, but as a result of a past event, hold on, sorry. Okay, so firstly, what I'm trying to say with this is that there needs to be, you need to comply with the definition. Secondly, if you comply with that definition, it should be probable that the amount of economic benefits will be required to settle that obligation. At this stage, it is probable because the director said they are going. So, okay, cool, we comply with the fact that yes, it is probable. However, no obligation exists. So, though it is probable that there will be an outflow, not towards any obligation that we have at present. Right? And then secondly, a reliable estimate can be made of the amount. A reliable estimate can be made. That's 250,000. However, again, no present obligation. So when you conclude, you need to say that future operating losses do not comply with the recognition criteria of a provision, as there's no obligation in the first place. Right, I've gone through this really quickly. It is theory knowledge, so I think if you want, you can just read through that again by yourselves. Information point 4, what did they want? They wanted journal entries, didn't they? Yes, journal entries for information point 4. On the 31st of December 2017, Ubukhle declared a dividend, a cash dividend of 420,000. All the shareholders of Ubukhle are natural persons. The dividend as well as the dividend tax were paid in cash on the 31st of Jan 18. The payment of the dividend and the dividend tax has not yet been recorded in the accounting records. So basically what I have is a liability and also a tax liability. So I owe my shareholders money, but some of that needs to be withheld from them and paid to SARS. Right. Later on in the question, you will see that dividend tax is 20%. If we have companies, we don't deduct the dividend tax for them, only for natural persons. So this was a quite easy calculation in terms of your information point 4. Can we see that? No, we can't. There we go. Why? Okay. Right, so we have got I can't write here. Dividend declared, debit that dividend declared. Can't see still. Come on, man. There we go. Right, so we debit that dividend declared with 3360. We're going to basically credit our bank with 420 when this is paid. Credit bank 420. 20% of that is the 84,000. So if you want to put the calculation there, that would be 420 times 20%, and the difference would be your dividend declared. Right, just to be clear, what basically happened here is you declared the dividend declared the dividend of 420,000 on the 31st of December 2017. The dividend and the dividend were paid in cash. So they were actually paid, yes. You should take it out of retained earnings. Yes, you're right. Yes, yes. So what would have happened? Let's just backtrack a step. In terms of my timeline, when this dividend is declared, where's my timeline? Can't work like this. Right, in terms of my timeline, my dividend was declared 31 December 17. Journal entry passed on that date would have been to debit retained earnings with the full 480,000. Is it 480? 420. Then you would credit your tax liability, credit dividends payable. What's happening in my current year is this journal entry has already been recorded. I just want to pay for that. Right, so that's why you see a debit. A debit to, where's everything? Okay, can't do this. Right, you have your debit to dividend declared and SARS, so reversing the liabilities you raised and then paying it out of bank. Okay, so you guys all happy with that? Yes. Right, that was point number 4. So that was the journal entry. In terms of point number 5, can't see it yet. There we go. On the 17th of December 2018, Ubuhle instituted a claim of 855 against Snoop Limited, a major competitor of Ubuhle Limited. The research staff at Ubuhle discovered that Snoop Limited illegally copied Ubuhle's antiretroviral medication formula. At year-end 31 December 2018, the lawyers of Ubuhle were of the opinion that the claim will probably succeed, but they were not virtually certain. What do we have here? We instituted a claim against someone. We are certain it will succeed, but not virtually certain. So we have a contingent asset. Contingent asset is not journalized, only disclosed. So in terms of point number 5, this is in E. I've got a contingent asset. Okay, I've got a contingent asset. What I need to mention is firstly the amount, then give an explanation. There was patent theft or whatever you want to call it. The lawyers are not virtually certain. However, it is probable. So you need to indicate what is the probability, and then the case will be settled on the 31st of March. So what we need over here is a date that we expect it to be settled. We need an amount. We need an explanation. And lastly, we need to indicate that it is probable. If it wasn't probable, we wouldn't have a contingent asset. There would be nothing. Everybody happy there? Okay, so that deals with point 5. Point number 6. Since March 2017, Ubuhle sells nebulizers. Huh? Nebulizers. Doesn't that sounds like the girl from Marvel? The green one. Huh? Yeah, that one. Okay. Nebulizers with a 1-year warranty. The warranty is a assurance type warranty. According to the terms of the warranty, Ubuhle will repair and replace manufacturing defects that become apparent within 1 year from the date of sale of the nebulizers. at no cost. Based on estimates, the warranty provision created for nebulizers for the year ended 31 December 2017 amounted to 240,000 in respect to nebulizers sold during 2017. Right, in terms of 6, they asked me for disclosure. I've got a provision for warranty. What I left out of this memo is the explanation there. So what I need is to explain what provision this is. So you'll mention that it is a 2-month, it's 1 year, it's 1 year, and that if they return defective, we will repair or replace. Right, in essence, the fact that it's a 1-year warranty means that whatever was outstanding on the 31st of December 2017, by the time I get to my next financial year, in other words, 31 December 18, it's too late for anyone to return anything after that. So everything that I had over here would have expired over there. Everybody happy with that? So I'm going to have a complete reversal of any provision for 2017. Right, so they tell me that there was an amount of 240 provision for 2017, so my closing balance was 240. That means during that year I should have raised 240,000. Actual repair costs in 2018 relating to the warranty given on nebulizers amounted to 250. Can I reverse a larger provision than what I have created? So I'm limited in reversing that provision. Opening balance was 240, that comes straight from 2017, right? I can only reverse that to the extent that it was raised, 240. And closing balance, but actual repair costs in 2018 was 175,000. My closing balance for that year was 300,000. So I want to raise then additional 300,000 so that I end on 300. Right, so just quickly going through that journal, those journal entries. In 2017, or these are all the journal entries for 2018. Remember, I'm sitting on a provision of 240, and then I reverse that full provision, but I pay out of bank 250,000. The balance, that additional 10,000, goes to raising an additional expense. Is everybody comfortable with that? So I didn't raise enough expense last year. I raised the rest this year. Okay. Then what was actually paid was the out of bank, credit bank, 170,000, and debit expense, 175,000. This one, I think, is just a duplicate. So just ignore that one. And then I raised the provision for the current year, debit expense, credit provision. Right, so just go through those journal entries again in your own time. See if you can make sense of them. You could have combined these two journal entries into one had you wanted to. Okay, principle to learn here is that you cannot reverse more than you actually raised. Can't sit with a debit provision. Right, that is the disclosure for note number 6. Note number 7, on the 15th of Feb 2019, the intrinsic defect was discovered in heart rate monitors manufactured by Obuchle. 1st of February 2019, when is my financial year end? 31st of December 2018. So does this happen after my year end? Right, so the only thing that this could relate to is events after reporting period. And I haven't yet read. Point 9 tells me that the directors authorized the financial statements for issue on the 20th of Feb, and we see that the 15th of Feb does fall within that period. So this note should relate to events after reporting period. They did ask for disclosure. Right, further investigation revealed that the intrinsic defect arose since January 2019. So this is a non-adjusting event because it arose after year end. Happy? So only a disclosure required. As a result of the faulty device used in the manufacturing of the heart monitors, consequently, Ubuhle will have to repair all the heart rate monitors manufactured since Jan 19. The estimated repair cost would be 600,000 to repair all these defects. All of this just goes into a note called events after reporting date. There you can see it. And then you basically just tell them exactly what they told you. Nothing funny there, yes? Yes, sure. Um, okay, I hear you. Yes, it would. But the issue we have with this one, sorry, I can't go there. Let's go here. The only issue here is a provision needed to be raised on 31 December 18. We only discovered this defect after year end, and the defect related to things that happened after year end. So it can only be an adjusting event if, say, the heart rate monitors were manufactured over here. So if I find out about it on that date, that means that the mistake was part of 2018. So that's then an adjusting event. So if whatever comes to light relates to events at reporting date, then yes, I go back and do journal entries. But because this relates to events after reporting date, I only disclose. Make sense? Okay. Oh, you were talking about point 6. Sorry, what? Sorry, then I missed you. What's your question? You don't have to. I did the journal entries. If you want, you can put it into a T account. Basically, we'll have yeah. So what you would have, um, these are the journal entries I did. So basically, what you would have is your provision account. In 2017, you'll have a closing balance of 240. Agreed? Is this what you're asking, or am I off track again? Yes? Oh, yeah. So I just said provision, but I meant provision for warranty. Okay. Yeah, so provision for warranty. Um, provision for warranty. Makes more sense now. Okay. Right. Okay, then we've dealt with 7. Dealing with 8, they asked for journal entries. On the 28th of December 18, Ubuhle sold sports supplements with a selling price of 975 to a major customer, Sports Limited, to credit. In terms of Ubuhle's credit policy, a discount of 6.5% is granted to debtors, provided that they pay within 10 days of the date of sale. Based on historical information, Ubuhle estimates that the majority of its customers settle their account within 10 days after sales. Right, so if they settle within 10 days, they get a 6.5% discount. Right? We expect them to settle within 10 days, so we expect them to receive the discount. Agreed? Right. Sports Limited paid the full outstanding amount on the 5th of Jan 2019, which is in fact within 10 days. And the sale of the sports supplements on the 26th of December has not yet been recorded. So they wanted the journal entry for this revenue. Again, main principle of revenue is it's the amount we are entitled to receive. We are entitled to receive only the amount net of the discount because we expect them to be entitled to receive that discount. Right, so what we have in terms of a journal entry. D. There we go. debit debtors, what do they owe us? They owe us the full 975,000 up until that point that they pay, and then they will settle less. Right? What is the amount of revenue we only expect to be entitled to receive? Some of that, because we expect to give them a discount of 975,000 times 6.5%. So there's a provision, we credit a provision for discount of 63,375. The balance is what we are earning in revenue. Right, so the only thing here is the fact that we can't recognize everything as revenue if we don't expect to receive everything as revenue. Right, that is that. The only thing I just want to come back to is my deferred tax calculation really quickly. There's a provision for discount of 33,375 and a warranty. Both of those are liabilities and work on the same principle. They have a carrying amount minus future tax deductions. That is my tax base. The carrying amount, let's work with the warranty, is 300,000. SARS says that they will only give me that deduction once it is paid. It has not yet been paid. So what are my future tax deductions? The full 300,000. So when it's paid, I'll get that deduction. I will get nothing this year. So my tax base is 0. Same principle applies to the provision for discount. Right, are you guys all happy with that? Any questions about question 2? Okay.